Good day everyone, this is your European Open briefing for Thursday, October the 20th. I'm Rafi Bayajian, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So the main headline this morning is of course last night's presidential debate between Hillary Clinton and Donald Trump, which was the last of the three election debates before the elections on November the 8th. And based on early polls, Hillary Clinton was seen as the winner of last night's debate. This boosted the Mexican peso, which hit a 6-week high, as the Republican nominee Donald Trump, who has anti-immigration policies, he was seen as failing to gain much momentum given his lag in the polls. We also had some comments from New York Fed President William Dudley, who was overall hawkish in his remarks. He pointed to a rate hike before the end of the year. We also had some unemployment data out of Australia. The unemployment rate was steady, although the employment data was disappointing, as the Australian economy lost jobs in September, and this hurt the Australian dollar. We saw oil go up yesterday after another drawdown in US crude stocks, although oil has since reversed. It's down today on profit taking. And we also another focus today is of course the euro, as we have the European Central Bank meeting due later in the day. So let's get started with the US elections. We can see here the Mexican peso, it rose, well, rather USD MXN, that pair declined, which means the Mexican peso firmed, although we can see it's since reversed. The Mexican peso hit a 6-week high of 18.44 per dollar, but it's since lost ground. It's down to around 18.54 per dollar. We had some snap polls after the debate. The CNN ORC poll put Hillary Clinton as the winner with 52% approval, although only 39% thought that Donald Trump did a better job. And of course, this is also, other than the Mexican peso, it has also boosted broader market sentiment today. We can see the dollar climbing against the yen after the debate ended. It's around 103.74 yen. Also supporting the dollar was comments from New York Fed President William Dudley. He said that if the US economy continues growing at current rate, that we should see an interest rate hike later this year. Although he did once again was cautious, as with Yellen, and saying that there is no urgency to tighten policy too aggressively, and this is due to some slack still remaining in the labor market. Now let's have a look at the Australian dollar. We can see quite a bit of a slump in the Aussie. This comes after employment data. The Australian economy lost 9.8 thousand jobs in September versus forecasts of again that the economy would add 15,000 jobs. The unemployment rate, though, did hold steady at 5.6%, but this was mainly down to a drop in the labor participation rate. So overall the employment data was negative for the Aussie. We had seen the Aussie climbing in recent weeks. This was due to improving outlook both on the economy and also on commodity prices. So the next big focus for the Aussie is the Q3 inflation data. That's due on October 26. So inflation and the labor market, those two are the key factors which will likely determine whether the RBA will cut rates again in the near future. Now looking at oil, we can see that spike up in crude oil prices yesterday after the inventories data. It's since dropped back to around $51.11 a barrel. We saw US inventories of crude stocks fall by 5.2 million barrels in the week ending October 14 versus expectations that they would rise by 2.7 million. So this is we've seen in the past few weeks, crude oil inventories have been declining as opposed to rising, and this is apart from the expected oil deal in November with OPEC. This is another factor that's been helping oil prices firm in recent weeks, although today they're down mainly due to profit taking. We've got a bit of a strange behavior with the Canadian dollar. We can see yesterday it rose, or rather the USD it dropped to below 1.30 Canadian dollars. This came after the Bank of Canada announced its policy decision. It kept rates on hold at 0.5%, but it said that the inflation outlook was roughly balanced. The markets initially took this as being hawkish, although later, once the details emerged of the Bank of Canada's outlook for the Canadian economy, traders decided that actually the Bank of Canada was rather dovish. So we saw the Canadian dollar drop back, and we can see the USD it's back about 1.31 this morning. Now, a quick look at the euro. We can see the euro is still under pressure. It's stuck around 3 months lows. We have the ECB policy announcement at 11:45 GMT, and then at 12:30 GMT, ECB President Mario Draghi will give his press conference. This will be closely watched because most analysts are expecting some kind of change in December when the ECB's quarterly updated outlook will be available. We expect ECB will extend its QE program beyond March 2017, and possibly he may also, Draghi might also hint at some tweaks to the QE program. This is due to the fact that the ECB is basically running out of bonds to purchase, so he may add additional entities to include in the ECB's QE program, and we'll see whether or not there'll be any hints of this in today's meeting. And also another thing to watch with the ECB is whether or not he will signal what ECB plans to do if once the time comes to cut back on the QE program. This has been actually worrying investors in recent weeks due to some rumors that the ECB is already planning to cut back, although this is fairly unlikely as it's too soon for the ECB to cut back on its QE program, but nevertheless it's going to be quite a closely watched event. So let's have a look at today's calendar. We can see up here we had Australian data and employment data early in the day. We had some German producer prices, which was pretty much in line with expectations. Coming out later, we've got the current account data for the Eurozone. Another big item to watch is retail sales for the UK. This will be important as retail sales are an important factor in terms of measuring the UK's economic performance. It's expected to come in at 0.4% for the month of September. And then later, of course, we've got the ECB decision where they're expected to hold rates, the deposit rate at minus 0.4%. In the US session, we've got the weekly jobless claims, we've got the Philadelphia Fed manufacturing index, and then we've got existing home sales data. That's it from me. Thank you very much for watching and have a great day.